Hey everyone, Scott Johannick here, your Madison area realtor. Welcome back to another video where we talk real estate. And on this video, I'm going to be jumping into a Zoom call with my go-to lender, and we're going to be discussing the different type of lender options that you have available to you during your home buying process. So we're going to talk about the different pros and cons of what's it like working with my local community bank versus a credit union versus a correspondent lender or working with a mortgage broker. And we're going to talk through the different scenarios to help you decide which one is right for you. So if you find value in this content, please like, share, subscribe, hit that notification bell, and as always, please keep the questions coming. Most of the videos that I make are simply to answer questions that you send my way. All right, let's jump on in. Hey everyone, I want to welcome Aaron Bainan to the channel here. He's my go-to lender. And Aaron, since this is the first time you've been on this channel, I just want to give you a few minutes, talk about your history as a lender, and then what I want to talk about today is the different type of lending options that first-time home buyers or even second-time home buyers have, and what the difference is between going to their local bank, credit union, correspondent lenders, mortgage brokers, just to kind of give them a good high-level understanding of what options are out there, what might be right for them, and what might not be right for them. So with that, welcome, and then I'll give you a few minutes here to just kind of talk about who you are, a little bit about yourself, and a little bit about your background as a lender.
Thanks, Scott. Yep, so I've been doing lending for a little more than 15 years now. Started actually doing commercial lending. I worked for something called a real estate investment trust in Chicago. Came back to Wisconsin, specifically the Madison area. That's where I grew up and I'm from. And started working, really focusing more on residential and consulting, and it evolved into one of my companies being lending. And here we are now, basically 15 years later, and I'm still doing it.
Sure.
Yeah, so then while in my career, I've worked for brokerages, community banks, federally chartered or national banks, and correspondent lenders. They all have their positives. They all have their challenges. I think to answer maybe your question there, what's the difference between them? There's some core differences, some fundamental differences, and then basically the advantages or disadvantages between them, I'm gonna say fluctuates depending on the time, depending on the market you're in.
Sure.
So I guess really at the base level, the difference between like a bank and a brokerage is that a bank, whether that's a credit union, a community bank, a correspondent lender, a wholesale lender, the difference there is a broker is coordinating the transaction but not providing funds to the actual closing, where a bank at whatever level is actually funding their own money at the closing. Okay.
Yep.
So I guess the immediate disadvantage for a broker can sometimes be that they don't have 100% control of what I refer to as the supply chain.
Sure.
And that's where sometimes people have been a little scared of brokers.
Sure. So let's extend this out a little bit. If I'm looking to buy my first home and I go to a broker, are they essentially shopping around, and then how do I pay them? How do they get paid in that transaction? Like, what benefit would I have as a first-time home buyer going to a broker, and what sort of experience should I expect from I'm starting my loan process to I am now at the closing table?
Yeah. So, and it kind of leads into different types of even the banking side too.
Okay.
But typically to brokers, and I guess I'm gonna now, to answer that, I'm gonna include the correspondent lenders, okay? Or just mortgage lending institutions only, not necessarily a brick and mortar bank or credit union where they do everything. But to answer your question about the brokerage, you kind of also start to need to dive into just separating pure mortgage lenders from larger institutions that do a number of different services, okay? So a broker or a mortgage banker, okay, they're going to shop. Yeah, absolutely. They are at a point, they're going to have a number of different investors or underwriting channels where they can shop to get you the absolute best rate, pricing, terms. They'll research the promotions that are going on at any point in time, and they'll actually refine the search depending on that client's needs.
Okay.
Because believe it or not, like no two clients are the same. They're kind of like fingerprints.
Sure.
Even if you had we're working with two different clients and they both have the same credit score, the same down payment, and they're looking to buy homes, they have the same income, and they're looking to purchase something in the same exact neighborhood at the same price point, their underwriting is still going to be different depending on their jobs, how long they've had their jobs, how much other additional assets or reserve funds they have. Their qualification for different loans could also depend on family size, number of dependents, married or unmarried, like all these things add up. But to answer your question about what a broker can do, or specifically a mortgage banker, more directly is, yeah, they'll shop for you. Absolutely. What they'll do, unlike some banks will say, is that they have a wider array of different sources to try to shop for the best loan and product and rate for you. Whereas sometimes, depending on the institution, they may only have their own product, and it's a finite answer that you might get turned down at one place where you would not. I think often with a mortgage broker or specifically a mortgage brokerage or a mortgage banker.
Okay. So you mentioned a correspondent lender sort of shops around too. What is the distinct difference between a mortgage broker and a correspondent lender?
Yeah.
Like, what makes those two different?
Yeah. So your broker is never, they're not funding their own transactions. Okay. They are coordinating the transaction, but ultimately the investor or the end loan provider and underwriter is a third party.
Okay.
Whereas your correspondent lender, or maybe I should even just say your mortgage banker, is funding their own transaction. So they are in better control of the supply chain.
Okay.
So from start to finish, they have more control of the decisions being made, the turn times, the speeds at which things are going to get done. And then, at the closing table, they're sending their own money. So oftentimes, there's just a better degree of control in that process on the mortgage banking level.
Sure. And in that degree of control, does that also fluctuate to the flexibility of deals that a correspondent lender can do? Because they are working directly with investors and they do fund their own deals. Do correspondent lenders have more flexibility typically than you will see? And we'll talk about credit unions and banks next, but just in general?
Yeah. So the answer is, in theory, the answer should be no.
Okay.
But in reality, the answer is yes.
Okay.
And that boils down to specifically in the mortgage banking, assuming that a mortgage brokerage and a mortgage banking office, they have the same breadth of different investors and resources and channels. The answer would be no. They in theory be the same. That level of approval would be the same. But the reality is, where a broker is not funding its own transactions, it is often the case that there might be an overlay on the basics of underwriting guidelines. So what's an overlay, right? So you've got basic guidelines, underwriting guidelines that all lenders have to follow for that particular loan type if they're going to offer it through what is usually the Fannie Mae or Freddie Mac guidelines, okay? But if you're not controlling your own funds, you may have to be working with an investor, underwriter, who has an overlay makes their requirements more conservative or restrictive than the standard Fannie Mae or Freddie Mac guidelines.
Sure.
So your answer is no. A brokerage and a mortgage banker should, in theory, be able to get the same level of competitiveness and have the same flexibilities. But the reality is, your mortgage banking institutions often are able to work in a more pure environment with no overlays, and that means more flexibility and the ability to provide the loan where sometimes a broker cannot.
So a mortgage broker and a correspondent lender are typically the less heard of ways of acquiring a mortgage. Now let's talk just a little bit about what that process looks like for a credit union, because we do see down the side of the highway, you typically will see some credit union advertising enticing mortgage rates. And then why don't you talk a little bit about how a credit union differs from a correspondent lender, and then how a bank differs from a credit union, because you did say everybody has to sort of play by the same rules, like the high level, federal rules, I'm assuming, which I'll let you talk about. But why don't we kind of talk about credit unions first and then the bank process next?
Yeah, so all lenders, all mortgage lenders of any kind, we all have to follow the same rules, okay? Mm-hmm. With RESPA, the Real Estate Securities and Protection Act, and our guidelines for disclosure and timing and everything else. But when we start talking about credit unions, this is kind of where we also, I guess I'd say, we start talking about the timing and timing in the markets, specifically what's going on in the economy, what's going on with rates. There are times when, credit unions are the more competitive channel. They're the more competitive resource. And then there's times where they are absolutely not. Mm-hmm. This is really getting into the weeds, but credit unions raise their funds through a different channel than mortgage banking, conventional lending, non-credit union institutions do, where everybody's issuing bonds to raise capital to give the loans, but credit union channels they're a different bond type than where, frankly, what I work in today is mortgage-backed securities. Okay. So their ability to buy, and to kind of answer your question, and this stands for all lending institutions, they may buy bonds and rates ahead of a market turn, or behind it, frankly, and you're especially seeing this in credit unions as of late. They're buying their debt ahead of inflationary markets, and because they have those forward commitments, they're able to offer extremely competitive rates compared to typical retail mortgage banking. Okay. And that's at the onset of this volatile and potentially inflationary market, okay? But then on the other hand, it's oftentimes the case that credit unions are a little behind, and when rates are dropping quickly, they're not keeping up. So you can see, and this may change at any point in time in the future. It could change tomorrow with general trending, but it often seems that the credit unions aren't quite up to speed the way the rest of the market is. It's in terms of like rate changes and the volatility that happens there. But at the same token, credit unions, well, for that matter, I'll take a step back for a second. No particular lending institution or type is gonna fit an exact mold. There are credit unions that have a number of different investor channels. There are credit unions that even broker. Yep. So if something doesn't fit their criteria for what they would fund on their own lines and carry on their themselves directly, it's possible that a credit union is willing to broker the transaction through another channel just to service that client. So all mortgage lending, except if you're a pure broker, that's your only choice. You've got third-party channels. You're not funding your own transactions. But even in mortgage banking, your typical brick and mortar bank versus your credit union, a federally chartered bank versus a state chartered bank, or even the mortgage bankers, pure mortgage bankers that they don't do anything but mortgage lending. They all have kind of a hybrid between funding their own transactions and potentially brokering them. I think the real nuance is, and again, no two institutions are the same, but the real nuance is knowing or trying to do your research to find out just what programs brokers, bankers, or credit unions even have. I think it's often the case that borrowers, first time or repeat borrowers, don't realize that there's no two institutions. They may either have an overlay, or they may only offer a finite number of products and don't have the resources for others, and the borrower may never find out. They may not know. Case in point, I'm speaking in generalizations, I guess, but not all lending institutions, whether it's credit union or bank or broker, not all lending institutions do the government loans or work with down payment assistance, seconds, or grants. And as you and I have worked on together in the past, like those government loans are FHA, VA, USDA. Those are niche-oriented products, and it's often the case that a borrower might get turned down and think that they can't get 0 down or only a 3% down payment. And it's never properly articulated to them that they just chose a lender that didn't offer those programs or had an overlay that restricted that particular client from getting approved.
Sure.
It doesn't have to be that way. So I think the real answer to this question is not just making the distinction between the different types of lending institutions, but also really focusing in on, does the loan officer who works at that institution, have they properly articulated to the client what other alternatives there are out there? Or that are they kind of being silent on it, that they're just trying to squeeze them into whatever products they have?
Sure. So for, I guess, sort of as an ending topic, if I'm a first-time home buyer, typically I want to have the lowest interest rate. I want to have either the lowest down payment, if that's what I'm, one of the things that's important to me, or the lowest closing cost. In 1 or 2 minutes, what would be your high-level recommendation to that first-time home buyer about how to approach a bank versus a credit union versus a correspondent lender and mortgage broker? Is it to start the conversation just, hey, what loan programs do you have? And then go research those different loan programs to see which one's right for them, and then say, okay, go and compete against this loan program? Or what is your recommendation, since you've done probably thousands and thousands of different types of loans at this point?
Yeah.
What do you typically see as the best financial path for a borrower?
Yeah, so I guess, of course, you want to do your research.
Yep.
I often, you got to compare apples to apples. Whether you're a first-time home buyer or now thinking about an upgrade or a second home or trying to get into an investment product, whatever. You've got to compare apples to apples. You're often going to be enticed with the attractive rate, but what are the closing costs? And what were the assumptions that they made for advertising that rate? You might not fit into that. So yeah, ask them, depending on the program that you're looking to do, ask them what loan programs they actually offer, whether that's the, strictly conventional, Fannie Mae, Freddie Mac, conventional conforming products. Do they have a portfolio loan where they could make their own rules to help you? So it doesn't necessarily fit standard guidelines. Do they do the government loans? Do they do VA, FHA, USDA? Will they work with down payment assistance providers or, grant or second mortgage providers. And, I guess ultimately, forgive me, shoot. Sorry, Scott. The next thing you hit was the rate, and comparing the apples to apples. What's important to me is people don't just get enticed by rate, because just pursuing rate may not be the best course for any borrower, whether that's first time or repeat. You've got to find, like, maybe sometimes the cash to close or the closing fees associated with that rate are not to their best interest. It's, especially first time home buyers, it's often, they're making a minimum down payment. So with that minimum down payment, there's a higher PMI or some combination of a higher PMI or a rate. And then that can result in higher fees. But if you instead took a slightly higher rate for having lower fees, that might make sense, because, and on a funny note, like, we've got a lot of first-time home buyers that we help here, and they're like, yeah, this is it. This is the house. This is the forever house. And 3 or 4 years later, they're like, yeah, we're having our second kid and got another dog, and we do not fit in this house anymore. Yeah. But they paid the premium for the lowest rate possible when they didn't need to.
Sure.
So, I think that's the real trick, is no matter who you want to work with, don't just look for rate, but find out what the fees are to your specific situation before you make a decision based solely on an advertisement.
Sure. No, that's good advice. Well, with that, I think we'll wrap this one up. Appreciate your time, just giving us a high level overview of the different type of lending options out there. And I'm sure this will stem a lot of different questions and people reach out, so we'll have to jump on again soon to talk about different things. Just from this conversation, I think it'd be appropriate to have you again and talk about different loan options and the differences of those, because it sounds like those are pretty critical, especially to first-time home buyers and thinking about cash to close and how that all plays in the rates and down payments. So great information. Appreciate your time, and I will talk soon.
Thanks, Scott. Appreciate it.
All right, see ya.
All right, I hope you enjoyed that conversation with Aaron and I, and it brought a little bit of clarity to the different type of lender options that are available, because there are quite a few. If you are just starting out on your home buying journey and you haven't checked out my step-by-step home buying process video, check that out up here. And if you do have questions after this video, again, please leave them in the comments. Reach out to me wherever you are watching. I love making videos to help answer those questions for you guys. And until next time, I'll see you later.